Hey everybody, Brian Shannon here from alphatrends.net. It's Wednesday, the 3rd of April, 2024, and the markets finished with a little bit of gain here. It was kind of volatile today. Yesterday, of course, we gapped lower, and today I was looking for the potential. I'll show you exactly what I thought the potential was, is that this would be a double top here, and that we would see a little bit of a rally and then fall apart. This is what I had drawn in actually on Tuesday evening. So it's still possible we can see that scenario play out here over the next couple of days. As you know, I'm always a little suspect of the market when we're below the declining 5-day moving average. That's that orange line. And we were stuck exactly underneath it here today. So going back to the two time frames, the daily on the left and the 30-minute on the right, you can see we found buyers at the 2-day volume weighted average price today. So, possibility for tomorrow is that if we get some profit taking, it could end up going like this and then come down to that level that we had mentioned down near 513 as a potential area it could drop to, and that's kind of in with this anchor as well. The key on the daily time frame has really been this 20-day moving average, and we continue to find buyers at that. So for now, and as always, when the daily time frame is bullish with a rising 20, 50, 200-day moving average, we give the benefit of the doubt to the buyers. And when I'm talking about a short scenario setting up on the shorter term time frame, it's only meant as a counter trend trade. If you're familiar with my work at all, you know that I'm into trend alignment. That is buying. I'd much rather buy over here as the buyers regain control of the short term time frame because that puts it in alignment with the longer term time frame. Anyways, enough of that. It's the potential that we fall here a little bit. I'm not bearish on this market. Short term, I think we could experience some profit taking. That's all. The Nasdaq is below, or it's right at its declining 20-day moving average. We've broken this trend line here from the beginning of the year. And I don't view that as a big deal because throughout the year, I've been pointing out that, breaking a trend line doesn't mean a trend has reversed, because you saw that people back in February were saying right here, hey, the trend is broken, the market's falling apart. Well, then you redraw the trend line to that low, and then people were saying it broke here. So, don't put too much faith in a trend line break. It only means the rate of ascent has slowed, and that's all I'm looking at it as well. So for now, on the Nasdaq, you can see we have a declining 5-day moving average that we're below. We could regain that tomorrow, and that 5-day moving average would turn higher because we're getting rid of this data, meaning this was 5 days ago. So as we average that out tomorrow, if the market is to do this, well, then that'll turn the 5-day moving average flat and could turn back higher again. Meanwhile, on the daily time frame, we're really in this range, 433 up to 450. That's where we've been stuck for the last month and a half, and there's nothing suggesting that we're going to break free of that. So right now, maybe a little bit of profit taking, but this correction has been more through time than a deeper price correction, and that's generally a bullish thing. If we see a deeper pullback, the bottom end of this range, we also have that 50-day moving average in that area that might provide additional support. So it's tough to be bearish on this market. The Russell 2000 really it's just kind of a waste of time to me. I don't have the stomach for these types of rallies and declines, so I've basically been staying away from it. I just don't see why I need to trade a market that's so volatile here and really unpredictable. We're back below the declining 5-day moving average. I'd rather just not talk about the Russell 2000, so I'm not going to. But if it pulls back, down towards the 200 level, that's a round number. It's the year-to-date anchor. They get the 50-day moving average just above. Semiconductors were up 90 cents today. I'd also drawn in a potential bearish scenario in here. The key is that it continues to hold this near-term level, and as long as we're holding that, what is this, about 222, then we're neutral. If we break below it, we're neutral in the intermediate term, still bullish on the longer term time frame. So you've always got to think in different time frames and how they fit together. If you're just a long-term trader, it just tells you, now's not the time to be a buyer, to add to your position or look for a new one. Shorter term time frame, know where your stops are. If it breaks down below there, perhaps it leads to a decline down towards that 50-day moving average. That wouldn't be a horrible thing to see a little pullback like that. And for more aggressive traders, it might be worth shorting. So keep an eye on that. The biotechs have been a mess here. As you know, we've been reluctant to buy them because of this declining 20-day moving average, and that 20-day moving average will continue to decline for the next several days as we get rid of this data, and meaning we'd have to be above there. This red line, this red vertical line, is where we were 20 days ago. So that 20-day moving average is going to continue to decline like this. So even if it rallies up, it needs some work, and maybe in a week or so, a week and a half, then it can recover from some of this selling. But we've broken below, and we're holding below the year-to-date anchored VWAP. That's what that thicker purple line is. And you can see that this prior little band of support, we're going to need to get this biotechs back above really 93 to become more neutral. Right now, they're in a downtrend on the intermediate term time frame, so no reason to buy those. Back above 93, they become more neutral, and if it does that and rebuilds, then we can start talking about the potential for bullishness. But right now, they're an avoid at best. Financial stocks continue to do well. They just hang out up in here. They've been extended for a while. They hit that new all-time high, and they're really not getting much of a pullback. Just know where your stops are if you're involved in there. Energy names continue to drive higher. They blasted right through that prior band of supply, and they continue to move to all-time highs. So as long as they do that, know where your stops are, raise them up, and ride that trend.